So all of that, whether it's supply and demand, order blocks, whatever it is, break and retest, the market is going to move, is moving in waves. As resistance becomes future support. So let's take a look at the US dollar and the DXY. So if we come into it, we can see, hey, we broke past that level before, right? We were saying, hey, is it going to hold at this 12,811 level, or is it going to break it? It broke it, right? So the little head and shoulders idea where we saw the possibility of that level holding, neckline broke. So that's no longer in play right now. And we are moving bearish. So a lot of downside pressure right now on the dollar, okay? And we can see that right at that key weekly support level, we've got our A boundary, right? So we're continuing to push bearish. Continuing to push bearish on the US dollar right now. Keep in mind, we do have core retail sales coming up at 8:30, okay, which could impact that, okay, which could cause a correction to the upside if the news is positive. So just be aware of that. But you can see now how we're holding, right, how we tested this daily resistance level here, and it failed, right? It's failed. So right now, you have to say we're bearish on the US dollar. Okay, moving to the downside. So we'll see where the dollar settles. Okay, but right now we are looking bearish on most of your dollar crosses, with the exception of the correction play, right, on the yen. So speaking of that, let's take a look at it, right, and what's going on with these yen crosses. Okay, come down, take it to dollar yen play. That we had posted, right? Crazy move, but is now taking back just about all of it. We did get TP1, which is cool. So if we move out, let me zoom out. You can see that we got price to move. Let me find my fibs. There we go. So we can see we got price on the reversal. We came right into that 80-20 zone. Okay. And we got the correction, right, to the upside. Okay. That 80-20 zone is very, very powerful. Right, so I'm cleaning up a little bit here and just look at the price action. So we had price at that new AB boundary that formed. Price did not make any type of retracement. We didn't even get to a 236. We pushed down to this 118, 127 zone, and we got the trend line break. Okay. And it was looking for a little bit of a correction to come back down, right? And we got that. And you can see here that if we zoom in, we got the double bottom price action. Right? I was actually looking for it to kind of come a little bit lower if we can get it, but it held at this 1 hour support. You can see here, 1, 2, 3, 4, right here for the double bottom. And then we took off last night, and now we're correcting back to the downside. Okay? So that move out of that zone was over 200 pips to the upside, just to TP. So it was an explosive move. All right. So it's hard to call, right? You can't say that, hey, we knew it was going to explode in one big swoop to the 382. But all you can do, okay, you can't control the momentum and pace of the market, but all you can do is put yourself in the right position, right, in those key zones to make the play. Okay. How fast or how slow it gets there, we don't control that. All right. We don't control that. Okay. So that hit TP1, and now we're rejecting. Okay, now we're rejecting. We're going to see. We've got retail sales, right? We know overall we're bearish on the dollar. We got retail sales. We'll see if it comes through positive or negative and see how it impacts, right, this dollar pair. Any questions on this, UJ?
No, sir.
All right. So that's where we are. I can take this drawing out now just to keep it clean. All right. So let's see what's going to happen. Okay. So if we remain risk on, right? We know that the yen can act as a safe haven. We know that it has some strength again as a result of not that the market was risk off, but because of in December, some of the changes that they have made, right, in regards to their bond policy. Right now, everybody was anticipating, hey, are they going to make the shift in monetary policy? And they did not. They have. Okay, so we remain risk on. If we remain risk on, you look for the possibility of yen crosses moving to the upside. Okay, we'll watch this dollar closely with details. So no moves on that right now. Have to wait for the market to set up. All right, so let's move on. We'll take a look at we'll go through and take a look at these yen crosses. So we'll go and take a look at the Aussie yen. Now you all remember that on Saturday we were kind of looking at some of these yen crosses from the higher time frame and saying, hey, they all are having the same similar price pattern, but they're starting to settle in. The yen had been strong, but we're saying, hey, maybe there's a potential for price to start reversing. And that's exactly what we're seeing. You can see here how we got the double bottom, right? That came off this level. Right? So these are some of the things that we were talking about doing a ritual on Saturday. Okay, hey, that's something setting up. Okay, something setting up, at least from a technical perspective, right? Where we're coming into some key levels and similar price patterns are occurring across the board with the yen crosses. And we can see here that we double bottom and we're moving bullish. Okay, so we can see that explosive move. We got the rejection. Let's see if we can continue upside to the upside on that. Okay, after the correction. All right. Right now, I have, unless get a major sentiment change with the markets, I really have no reason to be overall bearish, right, with these Aussies right now. Okay, so this is kind of bouncing around, but you can see here we've got a low, right, higher low, higher low. Okay, so overall, you had yen strength, you got Aussie strength, so it kind of right, it's about to move it. See this zone right here, right? How it never really just took off, but I'm thinking now we get a correction and then a move back to the upside. If we take a look at the Aussie yen here, okay, on the one, you can see where we've got that move off the low, and we're starting to settle in into our buy zone. Okay. Starting to settle into our buy zone. All right. So let's see if we continue that risk on sentiment. Let's continue to see how high the optimism remains coming out of China. We know China is the largest trade partner with Australia. So any positive news out of China could positively affect the Aussie. Okay. So we got a nice correction here on the one. Let's see what happens with this pullback. Be patient. Use your additional confirmation. Draw your trend lines. Okay. We're in a market that is changing on the regular, and we know we should always use confirmations anyway. But right, we're dealing with some volatile markets right now. So draw your trend lines or use your cloud. Okay. Cloud confirmation, trend line break. See if let me put my other template on. Price action has been moving kind of fast, so let's see where we are in regards to our stochastic. Okay. We've got our stochastic moving into the buy zone. So let's just be patient to see if we can get a continuation, that C to D move, right? So we want to see price. Okay. See if we can get a little bit deeper. We're going to make those corrections. Okay. And we know that our correlating retracement level, our retracement level correlates with our extensions. Okay. So if we come into that 61.8 zone and we reverse, we expect a 1.618D extension. We move right, we move deeper. 786. Okay. We expect a 127. 86, we expect a 118. Okay. D extension. So let's see. Let's see what happens if we come down here on the 15th. We can see how price is pulling back. Okay. And one of the things you can do if you use cloud confirmations, you can use it on any time frame, right? Come in, put your cloud in. You say, you know what? I want to be a little bit more conservative with these moves, which in these times in the market, I don't blame you. Okay. Let it play out. Okay. See if this move can cycle down. Right? See how we're below the cloud? See if we can get back above it using our cloud confirmations. Right? So just continue to be patient with these yen crosses. Any questions on the Aussie yen?
Yep.
Appreciate it. All right. Let's take a look at the CAD yen. Okay. Nothing really ready for it to jump into this morning. Right? You got to wait patiently for things to settle down, right, after a major fundamental event. Okay, so this is the CAD yen, right? Correcting on the weekly. Okay. Yen strength. We know that oil, right? Canadian dollar is heavily affected by oil. We know that the oil prices were plummeting, right? Affecting the Canadian dollar. We know that the yen has some strength, and therefore you saw a correction. But here we are, right back. Okay, right back into this level. And we're holding right now at this 95.38. Okay. See if that double bottom holds. Okay. See if that holds. See if it'll form that base. And you can see right now as we zoom in on the lower time frames, how that level is holding. Now we're correcting. Okay. See how the market's taking back that move? Let's see what happens. Be patient. Be patient. Okay. So the thing with the Canadian dollar is that even though we do see an improvement in the oil prices, crude oil, we're seeing inflation come down, right, in Canada. So just like with the Fed, the question becomes, does the Bank of Canada become less aggressive in regards to their rate hikes, right? So we know in the United States there's a lot of speculation. Hey, now that we're seeing these key data points in regards to inflation start to come down, right? The Fed now in February is most likely to hike rates by 25 basis points instead of 50. There's some speculation that, hey, they may even pause rates and then cut towards the end of the year. The Fed saying don't bank on it. Right? We still got a long ways to go. Then there's speculation in regards to once they get to the level in regards to interest rates that they need to, how long are they going to hold them at those levels? So it's kind of the same thing in Canada, right? Is the Bank of Canada going to become less aggressive in regards to rate hikes to combat inflation because these data points are showing that inflation is coming down? Okay, so we have to really pay attention to that. All right, so here we are, same type of scenario. We want to wait, right? So we're already in that buy zone. Wait for confirmation. See if you can get a swing low in the zone, right? Because we might press down to retest the support. Okay? See if we can get a confirmation in the zone. Swing low, trend line breaks, stochastic. See if our stochastic is in the buy zone. If you're using the cloud, utilize your cloud. Okay. Let's put the cloud on the one. See where we are. Okay. See? Okay. See what happens. See what happens. Go to the 15. Look at it taking this move back. Okay. See what happens. Let me redraw my fib on the one real quick. I didn't take that off the major low. Yeah, it's still not showing up because the price action moves so fast. So that fib that I have is right. That. Okay. So there we are. So we're seeing that on the one. We're seeing that on the one. We're already above the cloud and we're pulling back. See what happens. See what happens on that. Any questions on that CAD yet? No? Okay. All right. So we'll continue to monitor that. That's your order. You left it alone. All right. All right. That's all right. We can't catch them all. Can't catch them all. Um, let's take a look at the euro yen. You see the same thing, right? Same scenario. Okay. And now we're correcting. Okay. So let's see what happens. Right? See what happens on the test. Yeah. Same thing. All right. So that's your euro yen. Any questions on that? Be patient. Be patient.
No, sir.
All right. Ryan, these are nice B2C moves, right?
Man,
But I
yeah.
didn't right. But after that move, last night I kind of leave that alone, right? Can't be greedy.
Yeah, I
Can't
did
be
too.
can't be greedy. Left them alone. Right. I saw early this morning starting to shift downside, but not a play I wanted to make. See what happens. See what happens on that. All right. Pound yen. Okay. Look, similar price action. Look at that. Okay. Can't make this stuff up. Look at your four. We see we're correcting. All right. A little lower pace. All right. So a little slower pace, right? In regards to price making that correction. Some of them seem to be a little bit more rapid to the downside. But there we are. A lot of good potential setups on the yen crosses. You don't need them all. You don't need them all. That's the pound yen. Questions on the pound yen? Nope.
No, sir.
All right. Take a look at the NZD JPY. Okay. All right. Way overextended. Okay. Way overextended. Let's see if it okay. So this should be here. Like that. Okay, so just wait. We've got a computers all over the place. If we let's we've got right your New Zealand versus your yen. We know, right? The New Zealand yen is an awesome risk on, risk off barometer. Okay. So if we're gonna continue to stay risk on, right? We continue to see those rallies on Wall Street, positive news out of China, right? We try to get a low price and look for further rallies to the upside. So just be patient, right? Gotten off to a good start to the week. Just be patient, right? Wait for your sweet spot. Wait for your sweet spot and your additional confirmations. So that's the NZD JPY, right? And this is why we do our weekly rituals. This is why we set our charts up way ahead of time. So that way, even if we live busy lives, we can let the trades come to us. Everybody follow me on that. Drop me a one in the chat. Let me know you guys are with me this morning. I know I'm not on here all by myself. All right. So this is how, right? When you look at this basket of currencies, your yen crosses. So when you look at how people trade small and they look to accumulate pips with smaller positions, right? Oftentimes this is how they do it. Right? You can see the similarities, right, in the price action with these yen crosses. So be patient, wait, because then if they get bullish, you can trade small. If you're swinging very small positions, you're looking to accumulate and add on to positions. These could be good setups, but we have to wait. We have to wait. Right? If you were trading B2C moves, you could just imagine the pips you could have accumulated. Right? Not my play after a huge report like that last night. Kind of hard to gauge how that market is going to react, but right, we can already see just on even the New Zealand yen, just the B2C move, just to that 382, how far is retraced, right? Over 100 pips. Now you do that across the board on the yens, and you got yourself a good week pip wise. Okay, all right. So we'll see if there comes an opportunity where we can take advantage of those back to the upside. All right, let's take a look at the Swiss yen. Okay. Now I did, Ryan, yesterday. I was listening to Bloomberg surveillance, and they had, I forget which institution the lady was from, one of the major banks, and they were asking her, what in regards to currencies, what move they were making, and she said, we're buying the Swiss yen. I said, oh wow, well,
Really?
yeah, that's exactly what she said. That we're buying the Swiss yen. That's one of our plays. So I said, well, I guess we better pay attention.
It's gonna be interesting to see, man. Because if we look at it historically, right, the Swissy was doing this thing for a while, and it is at a key. It was at a key level of support.
Mm-hmm.
We'll see. We'll see.
I know. Yeah, so when they're buying, they take out large, ridiculous positions. So
yeah,
they'll scale in. So I was like, wow, well, better pay attention to that. So they're managing major money. So this is where we are. Okay, and that's big time, right? When you're with these big organizations and they're handling, these global companies, handling payrolls and all types of stuff, that foreign exchange becomes very, very important. Especially when they're trying to repatriate money back to the United States. Exchange rates are very important. So there we are. All right, that's where we are on that. Let's continue to move down through the charts. And we can see, right, how fast this market has been moving, right? Where the smart fib is not even haven't even caught up yet. Okay, so that's another, it will later. All right, you can see that's another move, just like that. So let's see, right? See when it comes down into our sweet spots to retest these levels. See what happens. Okay, see what happens. All right, that is the Swiss yen. We are on the 15th. We've already got the new fib. Let that price come on down. Okay, look at the beautiful trend line break, everybody. Okay. It's only moving three ways: up, down, and sideways. Support and resistance, trend line breaks. That's all. Okay. That's all. That's all it's doing. Same stuff over and over again. Okay. That came off of an 80-20. All right, that's why I wanted to put those back in there. See? A, B, shallow retracement. We hit a 236 level. We came down to the 118, 127 zone. We are in the zone of support. And look at the reversal. Okay. So what we're looking for to occur, if we're going to continue to the upside, okay, A, B, C, D. Okay, boom. But once that D extension is hit, you have to what? Wait for that next swing high to form, which is way up here. Okay, that's how that goes. Any questions? Yep. So, for example, let's roll it back. Hold on 1 second. Okay. So look. Okay. If this is my current fib, this is my A. This is my B. All right. A, B. Okay. That's the AB boundary. Our C is our deepest point within our AB boundary. This was our lowest point within our AB boundary, right? We didn't quite get a 786 retracement, okay? So our last major level was that 61.8, okay? So, so our D extension is right here. On this fib, on this move on the fib, our 1.618 was our extension. So if I'm trading this, right, this is textbook, and my buy zone, okay, is in this area. I like 61.8s. I take 50s with structure, 50% retracements with structure. You add it there in that zone. Okay. If I put my stop below the A, right, which is a low of support, and I set my target at that 1.618 based on the level that price retraced. So if I enter, I set my trade up to enter at a 61.8 level, 786 level if it retraces there. Okay. Price swung off this 61.8 level to the D extension. Okay. Draw this a little bit different, like this. Okay. Like that. So my risk on this position was 66 pips. My TP was 187. Okay. That's almost a 3-to-1 risk to reward. All right. Everybody follow me on that? Drop me a 2 in the chat. Awesome. Okay. That's the setup, right? You had the same setup here. Look. Look. A, B, C, D. A, B, C, D. A, B, C, D. A, B, C, D. See? A, B, C, D. Until it fails. You're welcome. Okay. Okay. So if we know, okay, that's why we don't worry about, we're not afraid to counter trend trade in certain zones because we understand, right? You're welcome. You're welcome. We understand that the market moves in waves, right? So when you come in, people say, you should never trade against the trend, right? But there are a lot of big time professional traders that are counter trend traders, right? Oftentimes, if you're trading harmonics, you're trading the correction, right? You're trading the corrections. A harmonic pattern is going to give you the D point. It's going to give you the D point, right? A, B, C, D. For the correction. And that harmonic pattern is going to give you targets, the 382, a 61.8, and then the bottom of the boundary, right? If it gives you 3 targets. That's how it goes, right? So this here is a play. That's 138 pips, right? This B to C move was 107 pips to the downside, right? And you can use these fib levels on your B to C move for targets, TP1, TP2, right? So you can see that this is correct. So if the Swissy yen is going to stay long, okay, then when price comes into your zone, okay, to your levels, I love the trade 61.8s, 786s. I like those deep corrections. Why? Because the risk to reward becomes insane, right? It puts you in the right zones in regards to your risk to reward levels. So here, there, move our stop up like this, below our A. Because why? That's a level of support. Okay? Now, if it comes in our zone, hits our 6180, reverses out, there's our D extension. Like so. Okay? Now, a little tip, okay, is that typically when you look at the TP levels, I'll show you a couple things, right? That D extension, always put your TP level, right? Your exit a few pips before that D extension, right? Because we know price can react before that. Okay, and you don't want to get caught in a strong reaction down. Another thing is that this is quite a ways, even on the 15. So here, that's 100, call it 150 pips, D extension, 447. Okay, huge move. But what you could do is you could set targets for yourself. So if this trade moves back down and corrects into your buy zone, okay, moves up, you might set additional targets, right? So you may say, you know what? B boundary is always a strong level of resistance. 118, 127 zone is an area where people may want to take profit. So you can set it up in the zone somewhere around that. And you can look to reduce your trade at these levels. Okay. In addition to, so we have our break and retest traders. Okay. If you mark your levels from the top down, like you can see, let me take these 5 positions out. Okay. If you mark your levels from the top down and price comes into your zone and starts to swing, well, we know we've got these levels here. These are daily levels that we brought all the way down. Okay. Now you can see your entire chart at a glance, right? You can see all your time frames at a glance because these are my daily support levels, right? That price is pushing through. Well, if price is going to swing, what's it going to do? Typically, right, you see the D move. Okay? But it's not going to move in a straight line. When price comes down, okay, if it wants to reverse, it's going to do what? In order for it to get going back to the upside, it's going to break. It's going to retest. So if you like trading that style and you say, you know what, I just want to take it to the next level, well, look, do that, right? Right? Okay? Because it's not going to move in a straight line. It's going to move in waves. Right? It's going to move in waves. Look, A, B, C, D. A, B, C, D. Right? A, B, C, D. Okay? So all of that, whether it's supply and demand, order blocks, whatever it is, break and retest, the market is going to move, is moving in waves. As resistance becomes future support, as support becomes future resistance. No matter what name you want to put to it, liquidity, flow, whatever, no matter whatever you call it, this is what the market is doing. Kind of hard to deny it when you drop a fib on it and you just look left, right? You can see that it happened. So you don't even have to look far to see that this is what occurred. You don't have to look far back to see, like, here's our ABCDs to the downside. Here's our 80-20, right? Signature play. And here's the reversal. Doesn't matter. Doesn't matter what it is. Yes. So can we use a long stop? What do you mean? What do you mean by that? A long stop? You mean like a wide stop, or you mean help me out? Some clarity on that. Now, so while we're talking about stops, okay, pull all this out. Okay. So as the market moves, okay, from that B to C, right? What is it going to do? It's going to break in, it's going to retest. It's going to break in, it's going to retest. It's going to move in waves. Okay. Right. And I know, right, when we have access to so much information, right, it could get confusing. But just know that it's talking about the same thing. It's the same stuff. Okay. Now look, right. So we say you either put your stop below the A, which is what? A low. That's a low. So your other option is, if you like tighter stops, okay, then you put your stop within the AB boundary. So price is going to do what? It's going to move. It's going to come down, right? And it's going to form, right, that swing low eventually in this AB boundary. It's going to form this swing low, and it's going to settle somewhere, okay, if it's meant to reverse. You take this, it's too long. But it's going to form that swing low. Now, once it forms that swing low, okay, you can put your stop below your C. But just know that when you put your stop within the AB boundary, because we don't control this market, if that level doesn't hold, it's going to stop you out. Still within your AB boundary, but it's going to stop you out. So maybe price wants to just push lower, okay, and make a lower low. Well, that's going to stop you out. And you have to be okay with that, okay? You have to be okay with that. You say, you know what, I don't want to stop loss that big. I want to trade with a bigger lot size, because we take our risk percentage and we divide it by our stop. Well, this is a tighter stop. Okay. If we put our stop below the C as opposed to below the A, it's a tighter stop. So when I take my risk percentage and I divide it by my stop loss, I'm gonna be able to trade at a higher lot size. Okay. But my stop loss is tight. So typically your strike rate is a lot lower, but you can still be profitable. But psychologically, right, you have to be willing to take the losses. And that's the issue with a lot of new traders, right? And even veterans. Nobody wants to lose. Well, you have to become a good loser in this game. That's why risk management is important. Okay? That's why being patient and waiting on your setup and consistently putting yourself in the right risk to reward ratio on every single trade possible is important, because it's not about one trade or two trades. It's about how things play out over time. Okay. So, and you'll be able to stay in the game long enough to see that success. All right. Now, if you get stopped out in the zone, that doesn't mean that this trade is dead. What do we say, everybody? As long as price doesn't take out the A, it has no choice but to go your way. So what you have to do then, if you have to wait for that new low form, okay, you have to wait for that new low to form in the zone. Okay? Boom, it drops down, comes into our 786 level. Okay. Like so. Swing low forms, we try it again. And then it reverses. Then it reverses out. Well, now, even though you got stopped out at this level, price is held within the AB boundary. Now we're ready to swing. Well, if I get a 786 retracement, my projected TP level is not going to be a 1.618. It's going to be a 127. See? Right. If you got your stop below that C, then this is where your stop is. So your AB boundary stays concrete. The only thing that's going to float is your C and your D. The deeper the retracement, the less momentum to the upside, right? If these are our little energy trampolines, these fib levels, the lower we go, the less energy to the upside, right? We're jumping on the trampoline. If we bounce off of 382, right, we move higher. The deeper we go, the less energy, right, to the upside. So that's how that correlation works. So those are the approaches. If you like stop losses, right, and that's what happens sometimes when you're in that discovery phase, right? You tend to, okay, I want to run it tight, and you get stopped out a lot. But then you look at it like, well, why did such and such? How did they win the trade? Right? Are they fooling me? No, they just left a wider stop loss and they trade smaller. So whereas you may be able to trade at too many lots here, the math may work out and you only can trade at 5 micros here. Right? It could be the same 1%, but it's all about the wider stop loss versus the tighter stop. Okay. So that's why we wait for deep corrections if we're looking to go buy side, because we like just to put our stop below the A, and the deeper we make that correction, the better the overall risk to reward on the trade. So there's nothing magical about it. Right? It's just all math. Any questions on that?
Hey, Benny, can you hear me?
Yep, I can hear you.
The question was asked regarding the training. If you purchase the Inner Circle community subscription, you should have access to that training in your back office.
Yep.
And HP, remind me who you are again? Terry. Let me double check. I believe you should. So I'll double check your account and I'll send you an email.
Cool. So, right. So this is a good little lesson, right? In trading with the trend, right? We wait for a low price, right? We don't want to buy. We go grocery shopping all the time. The price of eggs are ridiculous, right? I would prefer to have that discounted, right? I would prefer to have that low price. So think about that all the time before you buy, right? If you're selling something, you want to sell it at a high price. Okay, so this is what happens when you're trading, right, with the trend, right? We wait for those deep corrections, and we like the fibs. That's why we teach it fundamentally, right? We don't teach it as something that's advanced, because the idea that the market moves in waves is fundamental to the market. It's fundamental, right? And so the Fibonacci sequence, therefore, right, is fundamental, and it provides a really good framework, especially for a newer trader, right? When it brings it all together. Where to get in, where to get out, where to set your stop loss for protection. Okay, it gives it all to you, and you can see right here how this market just moves in waves. Now, if you hit your stop loss right, you got backside protection. Okay, so that's it. So, hey, the moral of the story today is waiting on these yen crosses to correct to see if it's going to give us an opportunity. All right, we'll take a quick look at this S&P and then we'll log off. I know we are running over. Oh, we're right at 7:30. Okay, but we can see here where we drew this out on the S&P, right? The breakout trade, and that's exactly what happened. And so now we're just waiting. Okay, waiting to see how long this rally wants to run. Now, will it move? Will we have corrections? Absolutely, absolutely, we will. Okay, so even though we got this range breakout, if you take this low price here, boom. You can see exactly where we are in the fib sequence. So right around on the S&P, that 403 level, that's a D extension. We got a 382 right there. That was just a rocket, right? But we weren't tracking the fibs off of this because we were waiting for a breakout and a retest at that 387 level. And that's exactly what we got. That's why we had it where we had the rectangle around it. Okay, price is in the range and it broke out. So if you never knew anything about the fib, if you're just looking at price action, it was range bound. We needed a breakout and a retest. And that's what we got. Okay. That's what we got. Okay. Quick look at the US 30. Okay. Same thing. Right? Breakout. Okay. Breakout in the retest. Exactly what we got. It's a mirror image. Right? You run your fib off of that, that's what we look like. It all flows together, everybody. That's why when you frame it out and you really see the big picture, you're like, okay, I got this. Right? I see exactly what's going on. All right. So there we are. Gold made a rally. Okay. Take a quick look at these major setups. Okay. Got the rally. And we can see continuing to move. Okay. On gold. Yeah. This level seemed like it was forever ago. Just been moving straight up. So the question becomes, we'll see what happens with retail sales, right? Do we get some type of correction at some point? All right. You come into the 4, start the fib. Impulsive, right? We didn't get any type of deep correction on gold. Explosive move that tells you that the bulls are in control. 236 retracement. We may not get that correction back down. It's probably gonna hit that extension. Right? But no matter what the asset class, it's the same thing. That's why we teach it the way we teach it, right? The crude, right? Moving up. Remember when we drew that little trend line? I said as long as it stays above this trend line, we look forward to continue. We didn't get a retest of that level though. It just took off. It tried to, right? So we're doing a good job, everybody, right? Getting the direction right. Okay. Now you don't have to trade everything, depending on what your goals are. You don't need everything. But it's good for good practice, good repetition to get a view of the overall market, both technically and fundamentally, and what it's doing to the different asset classes, right? That's moving, right? Optimism, demand optimism coming out of China. Oil, bullish. We're running, right? We're running long until the market tells us otherwise, okay? We were looking at that Bed Bath & Beyond trade, and you can see, look, it moves in waves. Right? We said, hey, it took off, right? It got away, then you got the correction. Now look at where it's sitting, right? Doesn't matter. Look at the break coming right back into that zone that it broke. Okay, we'll see if we get more upside move on that Bed Bath & Beyond, right? That was one I'm tracking the hold, not necessarily looking to trade it, looking to hold, but it just shows you, right? The technicals are the same. The technicals are the same. 80-20. We don't have a 382 yet. Came up shy. Didn't hit a D extension either, did we? Let's see if we can get a continued upside move. So if this is going to be the C to D move, look, Bed Bath & Beyond, look, here we go. All right. If you were trading it, stop goes below the A. All right. Here's your D extension. We're sitting right at 50%. Okay. Past resistance becomes future support. See if we can get a continued upside move on that. If not, it's simple. It fails. You got to stop loss. Okay. Well, let's see if the market continues to rally and see if we can push it up to that level. Any questions on anything that we covered? I know it was a lot, right? We're waiting on the markets to reset, get off to a good start this week with some of the pairs, but after explosive moves and strong fundamentals, we gotta wait. Gotta wait. You bought a call option? Reese. Love it. Love it. Brian, anything to add before we wrap it up?
Good people. Hey, it's time to get to work, right? It's right there. Terry, check your back office. You should have access to that subscription to view all the training, everything that Ben went over today, and some more is there available to you. So go ahead and check that out. But like Benny said, dedication, right? Dedication, put the time in, and it'll come. It'll come. Great session, bro.
Appreciate it. And thanks, Ryan. And I will add, Ryan, I think we should get back because I thought that it was really good for people to learn. I think it shortened the learning curve for a lot of our traders back when we first started of just getting back to posting those AB boundaries in the in the Discord.
Yeah, we definitely should do that,
Right?
just to continue to see it and get that repetition.
Yep, and I think 'cause when we first started, we would simply put AB boundaries, right? So it was important for you to show up to the weekly rituals, right, and things like that for the setups because we would simply put the AB boundaries because that's the bat signal, and I still believe in that, right? That's the bat signal. When you get a new AB boundary, it's like, hey, do I want to play the B to C? Do I want to play the 80-20 move? Or do I want to wait to trade with the trend? Right. And it forced you as a trader to make a decision. So I really think we're going to get back to that. Right. To putting in those new AB boundaries as the you're welcome. You're welcome. We're grateful for you too. Thanks for being a member of the inner circle. I really think that's the way to do it. That's the way to do it because people learned, right? And I know there's a lot of people that's been with us for a while that can speak to that, but I really like that as the trade setup. Whenever we get that new AB boundary, no matter what the time frame, it's an opportunity, either for a counter trend move or wait for that low price to get that C to D. So definitely be looking for those. Ryan, I'll chat with you a little bit later about that too. All right.
Yes, sir.
All right. Vinny, agreed.
Agreed.
Appreciate the feedback on that. Yeah, I think because the more and more I go over it, I'm like, man, that was that's the best to give you that setup so you can make sound decisions as a trader, and then you can journal, right? What occurred? Okay, journal what occurred, and you learn your lesson.
Training.
Yes, it was. Yes, it was. So I look forward to doing that throughout the rest of the year. And then how we did it was, you look at the cloud training. If you want to use the cloud for confirmation, if you want to use trend lines for confirmation, if you want to trade the C to D, the B to C, or the 80-20, that's your call. And you get consistent at whatever. And that's how you really develop your trade plan. So, all right, everybody. Have a good day. We'll see you back tomorrow, 6:30 a.m. Eastern Standard Time with my man, Mr. Ryan Carson. She'll be hitting the charts to see if we can take advantage of for the day.
Oh,
Thank you very much.
I like this.
You're welcome.
Training in the morning.
What'd you say?
I like how y'all doing the training for in the morning. I don't, because even though I make it for nighttime, I feel real well rested today, and I feel like I could conquer the chart. So I appreciate
Absolutely.
this.
Absolutely. We think this model might stick. So appreciate the feedback.
Thanks, guys.
You're welcome. Have a good day, everybody.
You too.